They say owning a home is the key to building wealth. But what if, at the moment, that key unlocks a financial nightmare instead? Right now, millions of Americans are facing a harsh new reality. The cost of buying a home has skyrocketed, while rents in many areas have stayed surprisingly affordable. We're talking about massive monthly differences that can add up to tens of thousands of dollars a year. And the craziest part? These shifts aren't just happening in expensive coastal cities. They're happening in places people used to move to because they were affordable. So here's the question. In today's housing market, are you smarter to rent and save, or buy and bleed? In this video, we're breaking down the top 10 states in America where renting is cheaper than buying a home at the moment, and we're going to show you exactly why. This isn't guesswork. These are real numbers, real trends, and real money you could be saving every single month. If you're planning to move, invest, or just survive this housing market, this video is required viewing. So, hit that like button, subscribe to the Globe Realty, and stay with us, because what you're about to learn could completely change your next move. Let's get started. Number 10. Illinois. Step into the heart of the Midwest, where cobblestone alleys wind through shadowed corners of a city that built the skyline dream, Chicago. Now picture this. A working couple, maybe a teacher and a tradesman. They find a modest home in a tidy neighborhood. Price tag? $315,000. Mortgage? A steady $1,980 a month. Throw in property taxes and insurance, and the monthly tab climbs to $2,540. Respectable, right? But just across town, another family is renting a similar home. No mortgage stress, no surprise roof repairs, for $2,337 a month. That's a $200 a month difference. Not huge. But in a time when every dollar feels like it has a job to do, that $200 buys freedom. It buys time. It buys peace of mind. Now ask yourself, is the extra cost of ownership in today's Chicago worth the trade? Especially when rates are high, taxes are heavy, and the housing market is treading water. Back in the day, owning a home was a rite of passage. But today, in this city of deep roots and shifting winds, renting might just be the wiser move. So, what would you choose? Ownership with obligation? Or flexibility with foresight? Drop your answer in the comments, and don't go anywhere. Because the story only gets more surprising as we move to number 9. Number 9. Georgia. Welcome to Atlanta, where peaches are sweet, but home ownership? Not so much. Let's talk about Atlanta, the land of southern charm, exploding skylines, and confusing real estate math. At first glance, it feels like the perfect place to buy. Homes are going for around $402,000. and $2,000. That's not too crazy, right? But here's where it hits your wallet. With current interest rates, your mortgage lands at about $2,690 a month. And when you add taxes and insurance, you're looking at a monthly ownership cost of $3,460. Now let's slide over to the renter's side. Same area, similar square footage, probably even the same granite countertops. For $1,912 a month, that's a difference of over $1,500 every single month. So here's the real question. Would you pay $18,000 more per year just to own the same kind of space, while juggling maintenance, rising insurance premiums, and unpredictable market swings? Atlanta's home prices have dipped slightly, sure, but the cost of borrowing hasn't. And until that changes, renters here are walking away with the better deal. So what would you do in this market? Lock in and pay more, or rent smart and stay liquid? Number 8. Massachusetts. Boston, where history lives, and homeownership takes your wallet to the past too. You'd think a place like Boston, with its Ivy League brains, cobblestone prestige, and timeless townhouses, would be a homeowner's paradise. And on the surface, it is. The streets hum with legacy. Every brownstone whispers of generational wealth. A home here feels like you've made it. But here comes the twist. The median home price in Boston? $793,800. And with current rates, your mortgage lands near $4,980 a month. Add insurance and property taxes, and you're suddenly staring down a $6,200 monthly bill, just to say you own. Now here's the curveball. The average renter in the same city is paying just $3,334. That's almost half the cost. For the same skyline, the same T-station access, the same Fenway breeze. So let me ask you something. When did homeownership stop being the smart move and start becoming the overpriced subscription to a dream that no longer makes sense? Sure, Boston has the charm. But in 2025, charm doesn't cover the mortgage. Sometimes renting isn't giving up. Sometimes it's the most powerful financial play on the board. Would you buy in Boston today or pocket the $2,800 per month and rent in peace? Stick around. The next state on this list, you won't believe how bad the gap gets. Number 7, Florida, Miami. To outsiders, it looks like a dream. Turquoise water, sleek condos, rooftop views that kiss the sky. The vibe? Luxury. The lifestyle? Untouchable. But beneath the palm-lined boulevards and golden beaches, something's changed. And if you're planning to buy a home here in 2025, brace yourself. The median home price? $589,200. Monthly mortgage? $3,700. Add in Florida's rising insurance premiums and property taxes, and you're pushing $4,560 a month just to hold the keys. Now pause. Because that same Miami lifestyle, the beaches, the nightlife, the city pulse, can be rented for just $3,118 a month. That's a $1,442 difference every month. And here's the emotional gut punch. Those who bought just last year are now feeling the squeeze. Insurance spikes, maintenance nightmares, property tax hikes. For many, the dream became a debt trap. All while renters sleep peacefully. Ask yourself, are you chasing a lifestyle or walking straight into a financial storm with a palm tree on top? Renting in Miami isn't settling. In 2025, it's surviving smart. Drop your thoughts below, and if this surprised you, wait till you see who lands at number 6. Number 6, New York. Let me tell you a story. Not of a first-time buyer, but of an investor who thought he knew the game. He saw the brownstones, the pre-war co-ops, the Upper West Side magic. He crunched the numbers, nodded confidently, and bought in. $796,700, the median price. Monthly mortgage, $5,000. Add taxes and insurance, you're looking at $6,820 every month. Meanwhile, renters 2 floors down, they're living in a nearly identical unit, same square footage, same building, for $3,824 per month. That's nearly $3,000 a month saved just by not owning. And here's the kicker. This isn't a fluke. This is 2025 New York, where home prices are sticky, taxes are brutal, and insurance isn't just high, it's historic. Now that investor? He's trying to offload the unit, but rates are up. Buyers are skittish, and his profit eroded. So here's the question. Is ownership prestige worth financial pain? Or is renting, in today's NYC, the smartest hedge of all? Not every deal is a good deal. Not every zip code is golden. Drop your thoughts below. Ever felt buyer's remorse? Or dodged a bullet by renting? Stick around. We're only halfway down this countdown. What are your takes so far? Would you still consider buying or continue renting? Let us know in the comments. Hit that like button, subscribe to this channel, and turn on the notification so you don't miss out on our weekly real estate updates. And now, number 5, Washington. In the city where coffee brews slow and ideas move fast, Seattle has always danced to its own rhythm. Tech towers rise beside moss-covered rooftops, and ambition floats through the mist like jazz on an old radio. But beneath the surface of innovation and industry, a quieter shift is unfolding, one that doesn't make headlines, but empties bank accounts. The average home? A cool $886,700. Mortgage alone? About $5,530. Toss in taxes and insurance, and you're pushing $6,820 a month. Now, here's where the melody changes. The average renter in the very same city pays just $2,258 per month. That's a difference of over $4,500 every single month. The kind of margin that used to be unthinkable in a place where ownership was once the mark of success. So now the question lingers like fog over Puget Sound. Has owning in Seattle become a luxury or a liability? Once, buying meant planting roots. Today, it might just mean digging a deeper hole. So what would you choose, the pride of possession or the freedom of the lease? Drop your thoughts below because the next stop on this list will make you question everything. Number 4. Colorado. Denver. A market once hailed as one of the fastest growing in the country, now showing clear signs of correction. In 2025, the median home price in Denver stands at approximately $558,700. With mortgage rates averaging 6.8%, a standard loan places your monthly principal and interest around $3,630. Now include taxes and insurance, which run about $990 per month in this region. And the total cost of homeownership comes to $4,620 per month. Now contrast that with the average monthly rent for a comparable home in the Denver metro area. $1,947. That's a monthly gap of $2,673, or roughly $32,000 a year. Here's where the numbers tell a compelling story. While home prices in Denver are down 3.6% year over year, borrowing costs remain elevated. At the same time, rents have fallen slightly, about 1.7% year over year, due to increased multifamily supply and shifting migration patterns. So what does this mean for a prospective buyer? It means paying over twice as much per month to own a depreciating asset in a cooling market, while renting offers not just lower monthly costs, but greater flexibility and liquidity. In simple terms, Denver is currently a renter's market, not a buyer's. Would you rather tie up capital in a high-cost mortgage or leverage the market by renting and watching it stabilize? Comment your take below and get ready. The savings only get bigger from here. Number 3. Oregon. Portland. A market that's long been praised for its livability, scenic charm, and progressive lifestyle. But when it comes to real estate in 2025, the economics are shifting. The median home price in the Portland metro currently sits at $546,300. With the average mortgage rate at 6.8%, that places the monthly principal and interest at roughly $3,550. Taxes and insurance in the region average around $960 per month, bringing the total monthly cost of homeownership to approximately $4,510. By contrast, the average rent for a comparable home in Portland is $1,747 per month, representing a monthly savings of $2,767 for renters. That's a significant spread, nearly $33,000 annually, especially in a market where home prices have plateaued and even declined in some zip codes. Rental prices, meanwhile, have shown only modest increases, about 2.4% year over year, thanks to an influx of new apartment construction and softer demand. So what's the takeaway? In Portland, the cost of owning a home has far outpaced rental value, and without strong appreciation to offset the difference, buying simply doesn't make financial sense for most. This market currently rewards renters, not buyers, especially those seeking value, flexibility, and lower monthly exposure. Is it better to hold off, rent, and re-enter the market later? Or commit now and risk negative equity? Let us know in the comments, and stay with us. Number 2 makes an even stronger case for holding the lease, not the deed. Number 2, California. Now we head to the Golden State, and more specifically, the Los Angeles metro, where the cost of homeownership has officially crossed into extreme territory. As of mid-2025, the median home price in Los Angeles is approximately $1,055,000. At an average interest rate of 6.8%, the monthly principal and interest on that loan comes to roughly $6,920. With property taxes and insurance, which are both elevated in California, adding an estimated $1,770 per month, the total cost to own is about $8,690 per month. Now compare that with the average rent for a similar home in the same area, $2,859 per month. This means renting in Los Angeles is saving households nearly $5,831 per month, or just under $70,000 per year. That is not a margin, it's a chasm. What's driving this? A combination of persistently high home prices, aggressive insurance premiums, especially in wildfire-prone zones, and one of the highest property tax bases in the nation. Meanwhile, rental prices have stabilized across the region, largely due to cooling demand and a wave of new multifamily developments. In short, Los Angeles is a textbook case of rental arbitrage in 2025. For prospective buyers, the math simply doesn't support the move. You're paying 3 times more to own, without a guarantee of meaningful appreciation in the short term. So the question remains, is the prestige of homeownership in LA worth the financial strain? Comment below and prepare yourself. The number 1 state on this list offers an even more dramatic contrast. Number 1, Texas. We close our countdown in Austin, Texas, once the darling of post-pandemic migration and tech-fueled growth. But in 2025, Austin also leads the nation in the financial gap between renting and owning a home. Here's the breakdown. The median home price in Austin is $528,500. With average mortgage rates holding at 6.8%, the monthly principal and interest payment comes in at approximately $3,440. Factor in taxes and insurance, both significantly higher due to Texas's no-income tax model, and your total monthly homeownership cost reaches $4,335. Now compare that with the average monthly rent for a comparable home in the Austin area, $1,704. That's a staggering monthly savings of $2,631 for renters, or nearly $31,600 per year. Even more telling, Austin's home prices have declined slightly, down 6% year over year, while rents have also dipped by 2.4% amid oversupply and softening demand. This creates a rare and powerful moment. Buying is not only more expensive, it's also a depreciating asset in the short term. The data is clear. Austin is the number 1 U.S. market where renting overwhelmingly outperforms buying in 2025. Whether you're an investor, a first-time homebuyer, or a relocating professional, the numbers point to the same conclusion. Now is not the time to buy in Austin. Let us know. Would you hold off, rent, and wait for conditions to improve? Or take the long view and buy anyway? Either way, one thing's for sure, the game has changed. And in 2025, renting isn't falling behind, it's pulling ahead. And there you have it, the top 10 states where renting is cheaper than buying a home in 2025. What these numbers reveal isn't just a market shift, it's a mindset shift. For years, homeownership was considered the automatic next step, the only smart financial move. But in today's climate of high interest rates, surging insurance costs, and stubbornly high property values, the old rules no longer apply. From Chicago to Austin, from Boston to Los Angeles, the data tells a clear story. Renting in many markets is not a fallback. It's a financial strategy. Now more than ever, being informed is your best investment. So before you lock yourself into a 30-year mortgage or rush into a deal you might regret, ask yourself, is this move serving your future or just your pride? If this video opened your eyes or saved you from a costly mistake, do us a favor. Hit that like button, subscribe to the Globe Realty, and share this video with someone who needs to hear it. Drop a comment below. Where do you stand? Team rent or team buy in 2025? More insights, more clarity, more truth about today's housing market, right here, every week. Until next time, stay smart, stay strategic, and stay tuned.